Today, I'm going to share with you 3 things that'll put you ahead of 90% of people in business as it relates to finance. Now, before you freak out, if you're not a numbers person, don't worry, either am I. I'm just kidding. I am a nerd when it comes to numbers. I studied finance and accounting for 8 years after high school. I got my CPA. I went down the CFO route, and I realized early on that people are really good at complicating things when it comes to finance. So we're going to make things very simple. I'm going to cut out all the fluff and we're going to just cut to the chase. So let's get into number 1. The first thing you need to know when it comes to finance in a business are the unit economics of the company. Now you may be wondering, what the heck are unit economics, Steve? Let me explain. Let's take a restaurant, for example. If you look at their revenue, which shows up on their income statement, that's their top line, that represents all the income that's generated from selling their products and services to customers. So the reason why you have to understand the unit economics is because when you disaggregate revenue, which sounds kind of scary if you're not a financial person, you understand what are the component pieces, what are the building blocks. In other words, so for a restaurant, you have the number of orders the restaurant takes. So when somebody comes in and they buy a burrito with chips and salsa, that's an order. When a family comes in and they buy enchiladas, taquitos, chips and guacamole. See, I'm kind of telling you what my favorite food is here. But when they place that order, that's another order. And so a restaurant will take a lot of these orders. Party of 1, party of 2, party of 10, if it's my family, because I got a huge family. And you take the quantity of orders multiplied by the average order value, then I'll tell you revenue. So check this out. If I'm going into a restaurant and if I understand the unit economics, the first thing I'm going to ask the business owner is, okay, how many orders do you do in a given period and what's your average order value? And then I'll benchmark it to other competitors. Then that'll help me to understand, do I have an average order value problem or do I have a number of orders problem? See how that makes sense? Because what most people do when they don't disaggregate items on the P&L into the unit economics, they'll just be like, we got a revenue problem. And they're like, we need to raise our prices. We need to do more orders. But what if it's not a pricing problem? What if your average order value is actually higher than industry average because you're really good at upselling them on your queso dip? The problem may be in the number of orders. So then if you can pinpoint the number of orders, then you can start figuring out what's driving the number of orders in the business and how do we drive more traffic to the company. So that's why unit economics are so important. Maybe you're a landscape company. Then you want to take what's your average contract value times the number of contracts you do in a given year. I think you get the point. So you could do this in any business. And it's not just for revenue. Think about labor as well. You could take number of hours times the average hourly rate. And that's how I like to think of things, the unit economics in a business, because it allows me to disaggregate the company and to narrowly focus on what's really driving the business in a bad way or in a good way. So you could totally do this, right? Just look at the line items on your financial statements and then break them down into units, into building blocks. All right, cool. That's number 1. Number 2 is cash flow, baby. I didn't mean to call you baby, but I love cash flow. It is my baby. Cash flow is my baby because if you don't have cash flow in a company, you can be dead. Now, oftentimes cash flow can be this like very complicated black box in a business, but it doesn't have to be. And just a side note, cash flow is not what you have in your bank. That's not your bank balance. Sometimes I'll ask business leaders, I'll be like, okay, what's your cash flow? They're like, well, let me go online and look at my bank balance. That's just the amount of cash you have. When I talk about cash flow, it's the amount of cash going in the business and the amount of cash going out of the business. And you have to track those, okay? So let me try to break it down very simply for you. In fact, I love cash flow so much, I wrote a book about it. All right, it's called Cash Flow. In fact, I drew a bunch of crazy random pictures of people and things. My employees like to make jokes. They're like, what is that? Why is that girl in the graveyard? I'm like, she's not in the graveyard. She's standing in front of a graph. Those are not tombstones. But nonetheless, I try to make it fun and simple because if you don't understand cash flow in your business, that's how you go bankrupt. Did you know 70% of companies that go bankrupt, they're profitable. They just run out of cash. All right, so let's work through this together. You have profit in a business. That's pretty simple to understand. That's revenue minus your cost, then you end up with profit. Here's the problem though. Think about most businesses. If I do work for you and I give you an invoice and say, hey, pay me in 30 days. Well, I'm recording that as revenue right now on my financial statements. And then I'm also incurring the costs. So I have to pay people to provide the service or I have to go buy materials or whatever. I'm incurring those costs today. So if I just take revenue minus cost and I get down to profit, sure, that shows up on my financial statements as profit, but you haven't paid me yet. So the money that you owe me is in accounts receivable. That's what it's called, the account. Also, maybe I bought a bunch of materials to do your job, but I haven't paid my vendors yet. So that cash is in my bank account and it hasn't gone out the door to vendors. Or perhaps I'm sitting on a bunch of inventory. So I have inventory on the shelf. I buy shirts. I have bricks in the back warehouse, whatever it may be, whatever my business is. Well, that inventory is basically cash sitting on the shelf. And then the last thing is, if I go out and buy equipment, so I go buy a truck, a trailer, a tractor, whatever it may be, a moped, depending on what kind of business I'm in, well, all those purchases are known as capital expenditures. Those don't show up on the income statement. They show up on the statement of cash flows. It's cash going out the door, but it doesn't show up on the income statement other than with depreciation and amortization. That's for a whole nother day. The point is that revenue and cost and profit that show up on the income statement don't always reflect those other things I just explained. And that's where you have the difference between profit and cash flow. I have so many other episodes that I've done on my podcast. I've done YouTube channels on this. So be sure to consume my other stuff if you want to learn more about it. If you want to get really nerdy, you can get into the cash flow book. But I could do a whole entire episode on cash flow. I think the key message is you just have to learn what it is, how to calculate it. And if you do this, I'm telling you, I promise you, you'll be ahead of at least 90% of people in business because most people are like revenue, cost, profit. Very, very few people get down to the free cash flow of a business. Let's move on to point number 3. But before I do that, if you're listening to this and you own a business and you're doing more than $2 million a year in revenue, and you're like, this sounds great. I just need somebody like you, Steve, to look at my financials and give me a second opinion. Well, here's the good news. We open up a few spots each month at Coltivar to review the financials of companies. We try to find at least $100,000 in profit and cash flow. And we always do at least 3 recommendations based on what we're looking at with the numbers. If this sounds like you, go to coltivar.com, check out the link down below in the show notes, and you can apply. As you can imagine, this is really popular, so the spots go very fast, but that's our offering to the world because we believe better business equals better lives, and better business starts with knowing your numbers. All right, let's get back to the third point. Here's the third point that I want to make. You can understand your unit economics, you can understand cash flow, and if you do, oh my gosh, I love you. You're so smart. But the last thing you need to know are the 8 levers of cash flow. And I kind of hinted at some of them, but let's go through these together. There are 4 that impact profit, and there are 4 that impact cash flow. Number 1 is volume. So if you do more volume in your business, you go sell more units, that's going to increase your profit most of the time. Caveat there, right? Hopefully you could deliver profitably and it'll increase your profit. But volume is one lever you could do to increase revenue, and then hopefully it trickles down to profit. Number 2 is pricing. So you can increase the prices of your products and services by delivering more value. That's very important to understand. Because I was talking to a business owner just recently. He's like, hey, Steve, I love your recommendations. I've been watching your stuff. I'm just going to increase my pricing by 20% and we're going to be golden. You have to be careful because if you don't increase the value at the same time, or if your offer isn't super compelling, you can lose customers. Customers can cut back or they could go to competitors, and that would be ouchie to your business. So we have volume and pricing. Next, you have cost of goods sold. What the heck is that? Just think of cost of delivery. Your labor cost, your material cost, all the costs associated with fulfilling your product or service after your customers buy it. So there are things you could do to improve your cost, right? To do it more efficiently. And then the last piece is OpEx. That just is short for operating expenses. So you can change your cost structure in your business. All the general administrative costs, the rent, the insurance, the payroll, all the overhead costs to run your company. You can get more efficient and tighten that up. Those are the 4 first levers of profit. But profit is not cash flow, remember? So there are 4 other levers. Now, if you're a nerdy CPA watching this, or if you're a technical person, or maybe you're just like a know-it-all. I know some of those people that want to like fact check people, okay? We can have an accounting debate if you want to. Just DM me. Just kidding. I won't debate with you. I'm going to just keep it very high level. I love when I create my content and I'll keep it high level and then somebody will throw in like a very technical like nuance. I'm like, yeah, of course, but I'm trying to explain this to the average person. Or if I get really detailed, people are like, wow, you need to keep it more high level. I just can't wait. All right, here we go. The 4 levers of cash flow. Generally speaking, there are some other ones, but generally speaking, you have accounts receivable. That's the amount of money customers owe you. Remember, you invoice a customer. You say, pay me in 30 days. And they say, okay, I will. Checks in the mail, right? That's called accounts receivable. Accounts payable is when you owe your vendors. Payable or payable to your vendors. Easy to remember like that. That's how I think of it. So accounts payable is another lever of cash flow. And then you have inventory. I talked about that. That's all the product that you buy, the raw materials, all the work in progress sitting on the shelves. Your work in progress shouldn't be sitting on the shelves. You gotta be careful. That's kind of like a tongue twister. I almost said a bad word there. But you have inventory sitting on the shelves, right? So cash is tied up in inventory or work in progress, etc. And then you have CapEx. So investments in property, plant, equipment, trucks, trailers, tractors, buildings, etc. All the assets to run your business. Those are the 4 levers of cash flow. Let's do these together. You have volume, price, cost of goods sold, OpEx. Those are your 4 levers of profit. And then you have accounts receivable, accounts payable, inventory, and CapEx. Those are your 4 levers of cash flow. Now, like I said, there are some other ones like prepaids or accruals that may be impacting your working capital. We won't get into that right now. I just want you to understand the main levers. If you understand those 8 levers, you're going to be ahead of 90% of people in business. And check this out. This is why it's so valuable. When you're sitting in a business meeting, if you're a leader running a division or you're an up and comer, or you just want to step up to the plate, right? And you want to grow in your career. If you're sitting there in a meeting and you're like, hey, let's break down revenue into its unit economics and really understand what's going on in the business. They're going to be like, who the heck is this guy or girl? Dang, they're super smart. Or if you're talking about profit, you could say, well, how does this impact cash flow in the business? They're going to be like, wow, you're right. It is cash, not profit. And then if you could tie it all together and you could say, here are the 8 levers. How are we doing with each of these 8 levers? And what's really the one lever that's holding us back? What's the constraint? All right, you got this. I believe in you. You're very smart. Just keep things very simple. Don't let finance intimidate you. Push it back, right? Don't let it bully you in business. Quick story. You have to stay curious. When I was in public accounting, the big thing that I did that set me apart was I'd ask all these questions. I was probably the annoying kid out there, but I would always wonder, who are the customers? What are the products? What are the most profitable products? What does the offer sound like? Where do you get the capital from? Is it debt or equity? What does cash flow look like? And I just ask all these questions, either out loud to other business leaders or internally, and then I'd go find the answers. And the more and more you do this, the faster your business acumen will increase. All right, I'll catch you in the next one. Cheers. Today, I'm going to share with you 3 things. Yeah, that's it. So you could totally do this, right? Very simple. Just break down your work in progress. Shouldn't be sitting.